Singapore's economy expanded strongly in the fourth quarter of last year, driven by the robust gains in the manufacturing sector and a global boom for AI-related products. Now, taking into account the latest growth numbers, the Trade and Industry Ministry has also upgraded its growth forecast for this year to 2 to 4% from 1 to 3% earlier. Now, Singapore's economy expanded 6.9% on year in the 3 months ended December. That's higher than Bloomberg's estimate and the upwardly revised 4.6% growth recorded in the preceding quarter. Annual economic growth for 2025 rose 5% on year. That's higher than the government's advanced estimates of 4.8%, but easing from the previous year's growth of 5.3%. Looking ahead, the government expects the stronger than expected growth momentum seen in the last quarter of 2025 to be carried forward into 2026. Apart from the continued AI investment boom, the MTI said expansionary fiscal policies in advanced economies and accommodative global financial conditions should also support global growth in the quarters ahead. And we've got Sheana Yue to break this all down for a senior economist at Oxford Economics. Sheana, thanks so much for your time today. So an upgrade there to the forecast for this year, also better than expected Q4 numbers for the last year on year. What's behind this and what are the factors that could move the Singapore economy forward?
Thank you for having me, Sarah. So just basically talking about Q4 2025, as you've mentioned, the final estimates came out stronger than the advanced estimates. I think most of that really has to do with the stronger than expected of momentum from the exporting sector. At the end of Q4, at the end of the year, we were still seeing very strong momentum coming from the external sector to Singapore's growth. And as you also mentioned, that's likely to we are seeing that likely to continue into the early part of this year. We anticipate that to continue at least into Q1 and possibly even into Q2 of 2026. That will be mostly due to a stronger consumer demand coming from advanced economies due to the fiscal policies there. For example, it's anticipating US economy to still continue being quite strong in the first half of this year. But then momentum will probably start to slowly taper off across the year. So as a whole in 2026, we are anticipating growth to continue easing off following the trend that's we've seen in 2024 and 2025. There's already an easing there. We think that should probably continue across this year, not least because the full payback effects from a higher tariff should probably kick in, and we're also anticipating a trough in the kind of advanced economy demand as we enter the second half of this year.
Yeah. And AI also, that's one potential catalyst that has been highlighted. But we got interesting comments last week from Deputy Prime Minister Gan Kim Yong. He said we cannot assume that growth will automatically create jobs. And he was talking about, the context of AI. So based on what you're seeing, what has been the impact of AI in jobs in Singapore and in hiring?
Yeah, I think that's a very interesting question and very relevant. Lots of people have been asking. Basically, what's happening here is that AI is generating more jobs in the sectors that are people related to producing AI-related equipment such as chips and machinery. So we're seeing that in Singapore's clusters, the semiconductor-related clusters, and at the same time, AI is making people more efficient, more productive. We are seeing, based on the reports, we are seeing that basically there is more hiring for people with those kind of related skills that are able to tap on and adopt AI-related technologies. So we think that's a pretty good thing moving forward. However, on the flip side, it is also going to be a case where employers are going to require fewer staff than they previously had required, and we think those are more likely to be on the downstream, on the end of the chain, where people are actually trying to adopt, making use of AI in their jobs. So I think there is two sides to this. We'll just have in some areas more concentrated, more niche areas, where we're seeing more demand for workers, but at the same time, it's going to keep other employers also a bit more cautious. I think just generally more broadly, our view here is that AI is coming off a very high level, a very high surge in growth last year, and that's probably going to start to moderate. It will still be strong, but it will moderate from last year's pace, and just generally as a whole, that's going to cause just some slowing in labor hiring this year.
I see. And we're also looking forward to the budget that's going to be announced on Thursday. So against this backdrop, what are you expecting? What do you think are the priorities this time?
So for the priorities for the budget, I think we've got two main things that we are really looking out for. One of them is got to do with continued reskilling of the labor force. We think there'll probably be more measures, more efforts announced by the government to try and support, just to ensure that the labor force remains does not become redundant in the current AI, the trajectory that we're moving towards AI. In the labor force, and secondly, we're going to expect a little bit more, continued support for lower income households. We think that's likely to continue, mainly just to support the higher cost of living that they've already been doing for the last 2-3 years.
Yeah, Sheana, really appreciate it. Sheana Yue there, senior economist at Oxford Economics.